Hello and welcome to another episode of Earth911 Sustainability in Your Ear. I'm Mitch Ratcliffe, and we're back to have another conversation about living and, in this case, sustainable and investing sustainably. We're going to continue to explore those challenges of making ethical and environmentally responsible investment decisions with Newday Impact CEO Doug Heske. Newday is a financial services company that creates and manages a variety of socially and environmentally themed portfolios, which make it easy to invest to support your values. We're going to be talking with Doug every couple of weeks about different sectors of the economy, and today we are going to dig into choosing stocks based on the greenhouse gas emissions produced by the company. Now, the news here is not good. Industry continues to churn out more CO2 each year rather than less, and Newday's opinion of the companies we'll discuss today reflects that lack of progress. We're going to focus on Simply Good Foods, that's ticker symbol SMPL, Xylem, ticker symbol XYL, Darling Ingredients, ticker DAR, Hain Celestial Group, ticker HAIN, Bunge, ticker BG, Novozyme, which is an over-the-counter traded Danish company, and the biggest of the big, Amazon, which of course has the ticker symbol AMZN. You can learn more about Newday Impact's funds at newdayimpact.com. That's all one word, newdayimpact.com. Welcome to the show, Doug. It's good to have you back.
Mitch, thank you. It is great to be back. And this is going to be a really important discussion today, especially given the advent of COP coming up in the next few weeks.
It's going to be a very interesting 2 or 3 weeks and determine whether or not we make a turn or whether we continue down this path. And I hope we are going to at least veer a little bit off that path. So I got to ask, just to start out, what's your overall assessment of the U.S. economy's progress towards reducing greenhouse emissions?
Not very good, but certainly there's a lot of important discussion that's going on right now. But as we both know, discussion is not enough. And, going into COP here over the next few weeks, it's been somewhat disappointing that we've not seen political leadership, and even in some circumstances, corporate leadership joining the cause. So we're hoping for good things coming out of the conference. Certainly, there is an awful lot to be done associated with the fossil fuel industry, and with reference to our subject today, sustainable food and ag as well.
Now, I want to start off talking about what you don't particularly favor amongst the set of companies that we're covering. And as you mentioned, food and ag is an underpinning of all of these, but these are also highly diversified companies. In some cases, they do natural ingredients. This is Darling Ingredients, for instance. They do food and fuel material or feedstocks, green energy. They recover cooking oil at restaurants and convert that into biofuels. Is that kind of, as you look at companies, do you think that complex blend of lines of business is going to be typical of a more sustainable company in the future?
I think so, Mitch. And I think, as we've addressed in the past, there is no such thing as a perfectly publicly traded companies. These are big businesses in some circumstances, particularly for the sustainable food and ag sector. They are multinational businesses. They are complex. They are doing a lot of good things, but unfortunately, a lot of bad things, especially when it comes to, the major chemical companies and fertilizer companies and all.
Well, now, Darling is one of the ones that you are more positive on. It's up 79% over the last 12 months. Stock's at $82 and change right now. PE is around 27. What makes them more progressive compared to their competitors?
Yeah, I think Darling, more than any of the other sustainable food and ag organizations, is really, for us anyway, the way that we look at it, sort of the definition of sustainability. They have, since the late 1800s, been doing very admirable work regarding recycling. They were sort of one of the original companies that was engaged in capturing items that would end up in landfills and end up out in the fields and other waste areas, and recycling that for really, really good purposes. So,
well, that's interesting. They thought of it as raw material they could make money on, not necessarily as just, let's start recycling, because they came at this from a long tradition of creating efficiencies in their marketplace. What particularly is Darling doing that you're encouraged by?
Yeah, so they have, more than any other organization that we've examined, really been able to capitalize on the circular economy business model.
Okay.
And that's really exciting. So, outside of their financial metrics as of late, they have made significant advancements towards the improvement of the sustainable ag and food business. So they are the largest company in the world today that is both producing renewable diesel and collecting organic waste fats and oils required to make it. So that's really exciting. They are also stopping more organic material from going into landfills more than any other company right now on Earth. And things like protein-rich animal co-products is used today for high-quality pet food and commercial-grade organic fertilizer. The fertilizer problem is a big problem as well that we can talk more about today. It's even used in cooking oil from restaurants and expired meats from grocery stores. And all of these things are things that Darling has been collecting and reproducing in a way that, as I said earlier, really has a lot to do with the circular economy.
Now, let's talk about one of the companies that you're not particularly favorable on. Simply Good Foods. That's SMPL. They are trading at 185 times earnings. They're up 92% year over year, which, in retrospect, looks great. Why are they not a good decision for environmental reasons?
I'm not sure that they're so much not a good decision regarding environmental reasons, but they are a producer of, easy to access, fast food type product, oftentimes that gets sold at convenience stores and things like that. So they are an organization that has done well because they are, in large part, producing or doing some good associated with sustainable food. Okay. But from our perspective, just the valuations associated with the company right now don't make it a very compelling candidate for inclusion into a portfolio.
Now, they make things like the Atkins Diet branded snacks and foods. A lot of snacks, as you pointed out, that are wrapped in unrecyclable material. Are they making changes internally to begin to embrace packaging that can be composted, or anything other than simply continuing business as usual?
They are, all of these companies are under increasing pressure to change packaging materials and things like that. But from our perspective, none of them are moving fast enough, including Simply Good Foods. So they all can be doing more. I think regardless, though, they're a challenging company to own right now. And I think that there are better organization, better food companies to include in a portfolio.
So tell us about, by contrast, Hain Celestial Group. Now, Hain is another food and snack maker for infants, toddlers. They make kids' foods, but they've also begun to invest in plant-based beverages and desserts. And they sell under brands like Alba Botanical, Earth's Best, and Live Clean, yet are ranked an ESG, or environmental, social, and governance laggard by many research firms. What makes it interesting to Newday?
So we are watching Hain's carefully right now. So they are definitely identified as an organization as being one to pay attention to in the sustainability space. So I think that they're doing good work from a valuation standpoint. We're not crazy about the company as of yet, but we're watching them closely. They are making significant progress associated with moving towards more of a sustainable environment and producing in a sustainable way.
And they've beat their estimates twice this year, met them once. They're up 26.6% year over year, and they have a PE of 68. So you're saying that they're making progress on their GHG footprint, but that they're not necessarily fairly valued right now.
Yeah, I think that that's probably true. They have made significant progress associated with what are some or three primary drivers for the organization built around this idea of a healthier planet, production of healthier products, and then production of food, right, for healthier people. So, they have now 5 manufacturing facilities that are zero waste facilities. So that's great, right?
Yeah.
91% of their food products are non-GMO, right? 34% of their food products are certified as organic. 90% of their personal care products have no petroleum or associated petroleum products in them. So all of that is good progress. What we would like to see from Hanes is additional progress and a better valuation associated with where they are today.
Okay, so that's one to keep an eye on. Let's turn to another one that you like, and that's Bunge. Bunge is an agribusiness company, food, fertilizer, bioenergy. They grind wheat into flour. They make edible oils. This is also a company that has apparently, when I look at their quarterly results, really benefited from the pandemic's driving higher prices. They have really beat their estimates 3 times this year. But again, this is a company that is up 62% year over year, and is trading at, and this is what I think makes it such a good buy. Let me ask you, they're only trading at 5.7 times earnings.
Yeah, the valuation on Bunge looks really good right now. So you look at, as you just characterized, over the last 4 quarters, the company surpassed consensus EPS estimates, right? So that's great. And, we have a perspective that they are going to continue to do that. They have also benefited from acceleration of this attention paid into the ESG space. But the valuation on this company right now makes it look very, very compelling. And they are a leader of responsibility in the sustainable food and agribusiness space.
Well, this is really an interesting one. Do you think that when supply chain issues start to be resolved, that their earnings may not continue to outperform their estimates? Will there be a deflationary pressure on this company?
I don't think so. I mean, I think certainly there are a lot of things to be worked out with reference to these supply chain challenges across every business right now. But from our perspective, Bunge is going to continue to be a leader in the space.
And of the companies that you favor, we talked about Darling. We'll talk about Xylem, which is the other, in a moment. Is this the best potential growth opportunity that you see amongst this sector?
In all of the companies that we look at, Mitch, I would rank the top 3 as being Darling, Bunge, and Xylem right now. Okay. And I think that may change, of course, given valuations. The business is dominated by a lot of these major industrial food and ag manufacturers that have an awful lot of challenges today. And it was similar to conversations that we've had before associated with the fossil fuel business, right? But this is one that needs to be addressed. Food is the mother of all sustainability challenges right now. And not only that, but our planet's biosystems and human beings are becoming increasingly interconnected, right? And this is fueling an impending natural resource catastrophe in the future if it's not addressed. This is a big, big problem.
So the staples like flour and edible oils, is that where you see Bunge's best opportunity for converting to a more environmentally responsible business?
I think that is certainly one area. They are doing a lot of really good work across the agribusiness space in general, right?
Mhm.
And so whether it be associated with, selling agricultural commodities, including soybeans and, sunflower seeds and grains and wheat and corn and things like that. So, the other piece of their business that we're excited about is their edible oil products business and cooking oils and margarines and mayonnaise and things like that. So I think that there are opportunities across the business for acceleration here.
Okay, well, let's turn to Xylem, the other company that you are favorable on. Now, Xylem is their central business is wastewater engineering and the cloud services that enable management of wastewater, as well as machinery supporting it. Uh, they're trading at 60 times earnings. They're up 44% year over year. They've beat every quarter this year in terms of their estimates. What about Xylem tells you that they're making the turn towards a more GHG responsible business?
Xylem is a really important consideration for us associated with their, water measurement work that they do. So agriculture makes up as much as 70% of freshwater usage globally, and also leads to greater soil erosion and deforestation and things like that.
Right.
So, Xylem is doing a lot of work in the small farmer space. And, one of the highest expenses for small farmers is the energy consumption for irrigation.
Mm-hmm.
So it demands pumping solutions with high efficiency as well as reliable pumping systems to ensure continuous productivity. So they are offering this wide array of really high quality products and solutions for the small farm. And as we see a migration towards, because I think it's going to be absolutely necessary as we address the broader issues of sustainability in the ag space, that they're producing really important products for farmers to control their irrigation systems and control water. And this, in particular, here in the West, is super important.
Absolutely, and if we could cut the use of water in our food production by 30 or 40% through simple efficiency improvements, that would be a godsend in this era. Now, would you characterize Xylem then as being at the forefront of developing a circular economy in water?
I don't think there's any question. We actually hold the company in multiple portfolios here at Newday. And one of them being our clean water and sanitation strategy as well.
So let's turn to the last two companies, both of which you're not particularly favorable on. One is Novozyme, which is an industrial enzymes and microorganisms manufacturer for agriculture, and they make forest products as well. They're a Danish company. They've been downgraded and dropped by several research firms this year. They're traded over the counter and up 18% year over year, and they have a PE of 0 because they're apparently not profitable. Why is Novozyme not a good choice, but a company to at least pay attention to?
Well, they're doing some really interesting work in the bio area right now that we're keeping an eye on, and I think that potentially down the road, given that work, they will make it a good candidate.
Mm-hmm. Well, and what specifically are they doing that make them a good? Or when will we know they're a good candidate? Let me put it that way.
So, Mitch, Novozymes is doing some really interesting work as we had been discussing relative to its use of enzymes as seed treatment, so the plants can take in more nutrients and the whole process can become more efficient. Also, when it comes to animal agriculture today, one of the big concerns, obviously, with factory farming and beef production is cutting down on enteric fermentation. So, for lack of a better phrase, it's reducing cow, sheep, and goat farts and burps, right, which are a big problem associated with greenhouse gas emissions today.
And who would have ever thought we'd have an industry oriented around reducing farts?
That is absolutely the case. So what we're watching for right now is their progress associated with development of solutions in that space. And this also ties in to this idea that there is a lot of really, really positive work going on with private companies right now. And it's not just Novozymes, but it's others that are working on the reduction of what we were just chatting about, which is elimination or at least reducing emissions associated with meat production at these big factory farms.
Okay, so watch for news and developments around the around small farming and enzyme consumption, I believe, in order to reduce the enteric fermentation.
That's correct.
Okay, great. So let's move on to the big dog in this entire conversation, and that's Amazon. Now, Amazon is trading at almost 60 times earnings, but they're only up 3.2% this year over year. And compared to every other company we discussed, this one is the laggard in terms of valuation growth. Target, by contrast, is up 64% in the last year. And yet, Amazon beats by 20 and 30% every estimated quarterly estimate and has obviously a reputation for constant innovation. Why is this a GHG stock to pay attention to?
Yeah, well, that's and maybe just circling back on the earnings front, beating estimates for a long period of time up until this last week, right? So they've had a rocky start this morning, given their earnings announcement yesterday, which was a disappointment. So one of the reasons that we pay attention to Amazon is because of the work that they're doing through the acquisition of Whole Foods. Okay. And the challenge for us is that Amazon is an enormous business with very significant sustainability challenges around around their packaging, around their fleet of delivery vehicles and things like that. So, one of the things that needs to happen for us to become more positive on Amazon as a sustainable company is real significant progress associated with those two things that I just mentioned. They're doing really good work on the whole food side, but that is just not enough for us right now.
So let's talk about that last mile problem, because if we optimize our economy so that people get what they need, not too much of what they might want to consume. In other words, we reduce waste by using home delivery to get people the right food at the right time. Is the transportation and logistics innovation that Amazon is working on right now potentially a path to getting rid of that 20 to 30% of food waste that we know is endemic?
It absolutely is. And I think that, this is a complex problem, right? So this has a lot to do with their fleet of delivery vehicles as well that need to be all electrified, right? And so Amazon seems to be very intent on continuing progress in the area. From our perspective, it's just not fast enough right now. And we talk about this idea, you think about the amount of packaging, whether it be cardboard or plastic, that is used every year from Amazon. There are extraordinary things that could be done if we could get them to address this in a faster way.
Just to collect it after having dropped it off. There is literally a gold mine sitting on the front porches of America's homes. And we have not begun to monetize that at all, or recover it and turn it back into new material without the same greenhouse footprint. So in terms of Amazon's future, and there was an announcement that I was intrigued by this week that made me wonder whether or not there was an opportunity for Amazon to grow its business through taking its vans and using them when they're not being used for Amazon delivery. And that was the tie-up between Hertz and Uber. So Hertz ordered 100,000 Tesla vehicles, and they're going to allocate 50,000 of those to Uber when they're not in use for rentals. And that's a really interesting way to take your capital investment and amortize it across a broader line of business. Is that something that Amazon should be thinking about, which is delivering other companies, perhaps even the local retailers, products using their vans or renting their vans at night when they're not being used for Amazon purposes?
I don't think there's any question about it. And, and I think that, Amazon's leadership is a really, really bright leadership team. And I'm confident that over time, with the appropriate pressure applied to the organization, that they will continue to advance these types of opportunities for the organization and opportunities for us to address sustainability in a broader way.
So Amazon's going to have a rough quarter because of the supply chain issues. Is now a good time to potentially think about buying in?
After the company sort of stabilizes in here, it's having a rough morning today. And so, our perspective is that let's wait and see if it holds at the levels that it's at. The stock today is down almost 4% or $132 a share. What we would want to see is a resumption to the move back to the upside, but also confidence that this isn't going to be a repeat event in the next quarter as well.
Okay, so let's wrap this up with a kind of a general question. If you have $1,000 or $10,000 today, where would you put it to drive GHG reductions?
In the sustainable food and ag space, I think it's always important to create a diversified portfolio. So we have been a big fan of Darling for a long period of time. And so I don't think there's any question that should, in every portfolio associated with sustainability, should be a core holding. I think that the other companies that we had talked about today, both Bunge and Xylem, are important holdings as well. And I think that there will be an emerging field of new entrants into the market. There's a lot of really fascinating things that are going on the private side right now. I would expect in the next year or so, we will likely see Impossible Foods come public. And I would continue to look at organizations like Beyond Meat and Oatly, but at the right entry point today.
Yeah, Oatly, which is a company that I own, has not had a good run for the last quarter, but is very promising in terms of what the plant-based milks that they make. So it's certainly worth watching. So which of the Newday Impact portfolios would you suggest people take a look at if they want to put money into a fund rather than into an individual equity?
Well, one of the funds that would be, or one of the portfolios that I think would be of primary importance to have concentration in, would be what is a new climate action portfolio. Across the portfolio has aggregate net negative GHG emission scores. That is broadly diversified across multiple industries and is a global portfolio as well. We do run a sustainable ag and food portfolio that is more specifically concentrated on food and ag. But given all of the work that's important that we be doing on the climate action side today, I would be focused on what is the broader portfolio associated with climate action, of which sustainable ag and food is a critically important piece of.
Well, folks, you can find out more about that at newdayimpact.com. Doug, thank you so much for joining us and talking this through. We're looking forward to 2 weeks from now.
Great. Mitch, thank you very much. Nice to see you again.
We've been talking with Doug Heske. He's the CEO of Newday Impact. It's a financial services company that manages socially responsible, environmentally responsible, and in some cases, even religiously responsible portfolios on behalf of clients. Check them out at newdayimpact.com. Folks, please take a few minutes to share this podcast or any others that we do with your friends, family, complete strangers on the street. Stop them. Tell them that there is an opportunity to change and save this planet and the prosperity that we enjoy if only we take the time and make the investment to do it. We'll be back with another innovator interview soon, including another one with Doug Heske in 2 weeks when we'll be talking about another set of companies. This is Earth911, Sustainability in Your Ear. I'm Mitch Ratcliffe. We'll be back soon. In the meantime, folks, take care of yourself, take care of one another, and let's all take care of this beautiful planet of ours. Have a green day.